Opposite effect. As we were talking about with the signature tools for Kent, that's the stock repair in action. Now, the insurance tool. Let's take a look at something different. Do I have anything different? It doesn't matter. But let's just take a look at the insurance tool. Let's say that when I opened my married put position for MMYT, I think the stock was trading at about $66, $70, or $68. But let's say back on that previous chart we looked at, let me go back for a moment, make my trip. Let's say that I managed to buy down here in this range, okay, when the stock had pulled back and then it started to have a positive MACD, went above the SMA 20. Let's say that my cost basis for MMYT was $86 about 3 months ago. And I ran it up and now this fell down. But even though it's trading around 94, 95, let's go ahead and take a look at what I might be able to do with the insurance tool. So this is a little bit different. I got MMYT. We have a cost basis of $86 per share. And I'm going to go out a little bit further. Let's go to January. Let's see what's available in January. So it's going to ask me for my buy put month. I'm just going to select January and let's hit calculate. Okay, so I think it's telling me there are no, let me see if there's a, we know there's a December, right? Yeah, there we go. Okay. All right, so December, 84 days out in time. Maybe I have earnings coming up between now and expiration. I've got a gain on my security of 10.4%. I think after this fall, it's going to go higher. But I know I've got the election coming up in November. I've got earnings potentially coming out sometime in November, December. I think this has the potential, but I don't want to give up too much of this. I don't want to have this winner turn into a loser. What can I do? Stock's trading at 94.96. What this tool did is show me put options I can buy on this position. And what you're seeing here with the locked in profit, what does that mean? That means that if I owned shares at 86, after it was up about 25%, now it's only up about 10%, I'm worried about losing that other 10% and turning into a loss, but I still have an unrealized gain. Sure, you can close it, but you think it's going to rebound. Well, take a look. Here's that insurance tool. So buying the December 115 put is going to cost me $22.45. But I have a cost basis of 86. So that puts me only at a total cost of stock plus put at 108.45. But I have the 115 put. This gives me the right to force someone to buy my shares of stock at 115 at December expiration, or I can sell to close it at any time for intrinsic value. But my cost base is only 108. That means I have a guaranteed profit of 655 or 6% for the next 84 days. I am in a bulletproof position. Let's take a look. Let's go to the profit and loss chart here, to the more information button. Stock cost of $86. Buying a December 115 put with a stock trading at 94.96, again, 10.4% profit, unrealized. It's going to cost me another $22.50. I increase my cost basis to $10,845, but the put gives me the right to force someone to buy my shares of stock at 115. I have a negative max risk. Guaranteed a profit even in the worst case scenario if MMYT drops down to $60 per share of 665 or 6%. I'm sorry, 655 or 6%. And I still have unlimited upside if the stock continues to move in the desired direction that I expected, that it recovers back up to 110, 111, 120, 130. I can still see more profit. But of course, the election is not till November. My earnings might not be coming out till early December or late December. So, hey, well, I've got a stock. I've just guaranteed a 6% profit on the position of the 10% unrealized profit I've had. I've locked in 60% of my unrealized profit, left the upside open. But yeah, maybe I don't think MMYT in the next 21 days is going to break 105 or maybe 100. So let's go ahead and go with the 100. I think it's going to move back up, but I think it's going to be stable. I own the stock. I've got the put position, guaranteed profit. Well, now naturally I'm going to limit my upside, but if the stock continues to fall, I've got a guaranteed profit of 11.6%. Now, I don't like this to the upside. That's not what I don't like that personally, and I don't think you do either. I usually would want to sell the strike much higher, but the premiums were lower. But again, that's where we've got, I'm sorry, the stock insurance tool, and of course with the stock repair tool. Those are sort of the differences. Why did the stock insurance tool do that? I'm sorry, folks. It opened a separate window. But again, these are just some of the put options that are available to lock in some of your unrealized gain, go through earnings, go through the unknown of the election coming up, and other details. The stock insurance tool, even unrealized gain on your stock, you want to protect it. This is what you can do. The stock repair tool, I'm sorry, the stock repair tool, we saw that. We can put in our symbol, see a ratio call spread that'll help us get back to break even faster than just selling at or out of the money calls against the position, and not necessarily risk locking ourselves into a loss. And then the long option finder tool. That's going to help you to evaluate speculative positions, which call or which put is the best to buy. If I'm expecting a certain underlying security to move up at a certain price or move down by a certain price in the next certain amount of days, or as we mentioned, how I showed the gentleman on the coaching session this week, or last week, I'm sorry, it was last week actually, how as he's holding physical gold, he can use this optimized long option finder, the long option finder tool, to help him find put options that he could buy on GLD, SLV to help protect if he's expecting a 10, 15, 20% decline in the price of gold or the price of silver, using options on the ETFs for gold and silver to hedge his actual physical holdings that he has in his safe at his house or he has in a safety deposit box as well. So that's just a few actually of just the signature tools in action there. We went through that and we saw action in the portfolio tool of how to enter positions, how to evaluate rollout opportunities, how to look for those as well. And of course, we took a look at some of the navigation on the site earlier in the presentation. So good review of some of the signature tools, the difference between, of course, the stock repair tool and the stock insurance tool, and a good view on using the long optimized or the long option finder as well.